Good morning, good afternoon, everyone. Welcome to our special Bright Talk Summit session on remote onboarding and how banks are evolving and changing the game. Today, I'm very fortunate and lucky to be joined by Neil O'Brien, who is currently a consultant and former SVP of digital banking at Santander, and Robert Evans, co-founder of FinTrail, a UK-based financial crime consultancy. So maybe, Neil, I'll have you start by introducing yourself.
Hello, everyone. I'm a technologist who went into banking, and I've over the years been involved in a vast array of technology initiatives in banks, particularly at Santander and in the US. And most recently, the focus has been on developing a completely new technology stack, API-driven, cloud-based for banking. So my focus is in helping banks to get digital right and use the new technologies and develop new business models.
Great, thanks, Neil. And Robert, maybe you can provide a quick introduction about yourself.
Hi, thanks, Dean, and hi, everybody. I'm Rob Evans. I'm the co-founder of FinTrail. We're a consultancy that works with financial institutions and other sectors around the world to develop FinTech approaches to how they manage their financial crime risk. So we've worked with about 40 different FinTechs and financial institutions across Asia, Europe, and the US to develop new methods to manage financial crime and maximize experience for their customers.
Excellent. Well, thank you both for joining us. My name is Dean Nichols, and I head up global marketing at Jumio. And why don't we just crack on then? So I have identified about 3 trends that I think are kind of interesting in the larger space. The first is what I'm calling the evaporating branch office. What's interesting is that even well before COVID broke out, we were seeing bank branches closing in large numbers. In fact, in the UK, over the last 5 years, more than a third of UK's branch offices have closed. In the US, if you look at the top 100 US banks, they've reduced their footprint by probably about 50%, at least according to McKinsey. And so I was curious to kind of get your respective take on this macro trend. Maybe, Neil, I'll start with you. What do you think are some of the drivers causing branch offices to be closing in such large numbers?
Well, Dean, I think, it as you say, it does go back a number of years. And as digital capabilities came into consumers' hands, there was less and less need for the customers to turn up at branches. And if you remember, the evolution of digital in banking is that the digital online and apps were primarily focused on providing the capabilities to do transactions, to check balances, and not so much on digital account opening, which is a much more recent thing, that's been adopted in the last few years. If digital account opening had been a strong presence in the market back in the early part of this graph, you would have seen an even more precipitous decline in the use of branches. Branches are still, to a large extent, part of the customer experience, particularly for account opening. It's one of the few things that a customer has to go into a branch for. And we're now at the point where the technologies are so well developed that there really isn't any need for a customer to turn up at a branch. So we can expect further decline on this. It will take a few years for all of the capabilities of branches to go online. I often say that the branch is still the only fully functional channel that most banks have. Digital channels were designed to, if you like, sit on top of the branch experience to add to it. Now we're at the point where all that flips over and the branch is at most a secondary channel, and online and digital apps, etc., are the primary way for customers to interact with their banks. So we've kind of now got to a tipping point, and I think we can expect to see an acceleration in that trend as we go to a complete end-to-end digital experience in banking.
Excellent. And Rob, what is your take on this trend?
I certainly echo all of Neil's points, but I think also one additional point I'd like to sort of highlight is it's potentially generational. So I think as consumers, the generations now that are heavy consumers of products, people using Netflix, etc., are far more digitally savvy and digitally enabled. So I think we're certainly seeing a shift generally in our lifestyle and what we consume to more digital channels. So, I mean, I still know family members and friends who will only go and do their banking in branches, but even they have started to explore and shift towards potentially using digital products. So, I think there's a whole range of factors playing a role in this, and obviously with developments this year with COVID-19 and others, I think we're only going to see that accelerating very rapidly.
And I think that's a nice pivot to the next trend that we're seeing, which is just that, right? From 2019 to 2020, we saw the rise of digital onboarding increase 50, I think it's 55%. When you go from 22% in 2019 to 31% being where it's all they're opening their accounts via digital channels, that's a remarkable increase. And by the way, this was pre-COVID when this study was done. So I can only presume that this acceleration has increased since then. And I think it speaks to some of the points that you guys brought up. But do you see, is there anything in these numbers that surprises you, or is there anything that you want to comment on as far as this trend about remote digital onboarding? Maybe I'll start with you this time, Robert.
Yeah, I think it's interesting to see that the growth in actual mobile app is very rapid in that data, and I think that again comes to this point of generationally and just culturally, people are now really living on their mobile phones and consuming all sorts of material and product via their mobile phones, and that involves, you know, in periods where we are in transit, so maybe going from work to the office, etc., as well as just the fact that sometimes it's a lot easier to be able to log on if you're staying in a hotel via your phone, etc. So I think we're definitely, like you say, post-COVID, this will have changed significantly, so increased significantly. I don't think that will regress. I think we'll stay where we are, but it's really important that the products that are developed are digitally native by nature. And what I mean by that is that they are designed to be consumed in that way rather than a halfway house. And I think that makes those products sticky rather than, and keeps people on those products rather than fudging something that maybe people will get bored with eventually or get frustrated with the UX aspects of it.
Agreed. And Neil, what is your take on these numbers?
Well, Dean, I think it's really interesting that you put this slide straight after the one on the branch declines. And it's interesting to think a little bit about that, because what you see here is, massive burst growth, really, in digital account opening. Now, if you go, think about the previous slide, the decline of branches. Banks have been very branch-based. And what's that mean, really? Well, it means they're confined to a territory. They had a fairly fixed number of branches that changed slowly over time, and consequently, a number of customers that changed fairly slowly over time. So their technology offerings never really had to scale very quickly. This has all changed now. You're looking at this huge increase, 22% to 31%. That's really big. If you were running a branch-based organization, having something happen on that scale would only occur with an acquisition. You would never have to onboard that kind of burst capacity of of new customers in a world that is branch-based. So I think it's very important for it's a huge change for banks to have their technologies be able to scale very rapidly in ways that were just not required when they were branch-based.
Yeah, I guess it's also an opportunity for many of those banks as well, because now they can actually reach customers that far, maybe expand beyond their original geography, right, or where their branch footprint is.
And that's a huge opportunity, Dean. In this, in the United States, there is actually no bank that has presence across all 50 states, even amongst the big ones. So now we've got to the point where digitally, even a small bank can have presence across all 50 states. So they can suddenly address a huge market, which wasn't possible in the era of branch banking. And that means that you have to have a completely new set of technology capabilities. The old legacy technology stack simply can't do this. And making incremental changes to the old technology stack won't be good enough. So banks have to really start with a clean sheet of paper and figure out what is the technology architecture that is going to enable us to be sufficiently scalable to have this kind of burst capacity and onboard massive numbers of customers very quickly with a great experience.
Agreed. Well, I have one more trend that I thought I would tee up for discussion, and that has to do with what I'm calling new account fraud. And so this data comes from RSA Security and from Experience 2020 Global Identity Report. The first is that 40% of all fraud stems from accounts that are less than a day old. The second stat is that 57% of businesses report higher fraud losses associated with account opening and account takeover than other types of fraud. And I would probably also argue that these trends have also been accelerated in the COVID era. And again, there's a reason I put this slide after the other slides is I do think there's a correlation between as more and more banks are going online, that does open up new threat vectors, right? So, Rob, when you see these numbers and you do focus on financial crime, is this surprising or is this a continuation of a trend? What is your take on some of these numbers?
It's a really good question. I think it is a continuation of a trend, but that has tracked with the gradual shift, like some of your graphs show, towards more digital channels over the last X number of years. So I think it's a continuation of a trend, but certainly has been accelerated, certainly in this year of 2020. I think there's a couple of things just to be aware of. Well, firstly is, as I would sort of phrase it, it's availability of the opportunity to the criminal actors. By moving to digital channels, it's physically easier for the criminals to target multiple new products or avenues at any given time. They don't need to move from the sort of situation we're all sat in now and can be done on a computer, rather than tripping around lots of different branches or stores or whatever the mechanism is that they're exploiting. So there is physically more opportunity now for them to go after. So that will result in more opportunity. I think the people ask us a lot as to have they got better at defeating or trying to defeat the controls that we put in place. I'm not sure I've seen any evidence that they've got better. I just think it's become easier for them to do at scale, because as our technology has evolved in the way we do financial crime controls that we apply, they have also developed slightly new mechanisms for doing it. So I think there's an evolving threat there from their capability driven by the evolution of technology on their side, but there's also the fact there's just more opportunity that's easier to get at in the market by digital routes. Agreed.
And Neil, what do you think?
Yeah, I think the context is always evolving towards faster and bigger. We are living in a world of real-time payments. The banking technologies have, even the core banking platforms have moved from kind of batch-based overnight processing to constant real-time processing. So everything is happening much faster, and that gives some opportunity for fraudsters to take advantage. The banks, of course, can always put holds on funds. Either short-term defined holds or holds as long as they want, at least in the US. But the trend for customers is to have everything at a high velocity. It's a great inconvenience to have funds held in accounts by a bank. So banks are going to have to continue to work to figure out who is really a fraudulent actor, and leverage the technologies, especially machine learning, to figure out what are the patterns of fraudulent activity. And of course, these are always changing, so it is a constant game of trying to keep up. But the speed and scale that we are seeing with digital is far beyond what we've previously seen related to branches, for many of the reasons which Robert touched on.
Yeah, I agree. And I also think there's some macro trends that I'm not sure if people connect all of these dots. So the first being, we're almost inundated hearing about massive data breaches on large scales, where hundreds of thousands of records have been compromised. Whenever there's a data breach, that data takes seconds to find its way to the dark web. And then from the dark web, fraudsters and more sophisticated crime rings, they're taking all of that information and they're perpetrating identity theft on a fairly massive scale. And then in addition to all of that, so it's not surprising when I see these stats in light of all the recent data breaches, right? Especially when you think about account takeover, which is one of the key threats mentioned on the slide, where fraudsters are now, and it's not terribly complex, what they're doing is they're essentially brute forcing and taking all of those purchased usernames and passwords, and because many of us use the same usernames and passwords across multiple websites, even across different banking sites, which is unbelievable, they're literally using bots to try 100,000 different websites, hoping that Rob used the same username and password from that breach site onto some of these other sites. And now they're getting access via bots to take over his existing account. So it's not just that the new account opening is if I can get in and take over Robert's account online, right? And I'm able to maybe even change his password and lock him out. What other damage can I do once I'm in his bank account, right? So I think there's some connective tissue between the data breaches, the dark web, and the tools being used by cyber criminals today, and it's happening all very, very quickly. And that's, as a consumer, that scares the hell out of me. Knowing that my information from a data breach at some retail site, can be used against me on some other website if I'm lazy with my password use, right? So that's
why education is so important, Dean, because educating the consumer across all these different platforms about the vulnerability to data breaches, etc., and managing your passwords effectively, it's so important from a control perspective. So yeah, it's just a really critical point.
I agree, and I think it's just as important for banks to realize if I say that I'm Rob Evans, you can't just trust that, because it's, again, many times the fraudsters will have more information about Rob Evans than Rob Evans, right? Thanks to all this information they can kind of accumulate on the dark web. Neil, were you about to say something?
Yeah, and you mentioned passwords there, and we're forever hearing about the demise of passwords and hoping that they'll go away. But that is an area where hopefully we're going to see the elimination of this trade-off between security and customer experience, because who likes passwords? Obviously nobody. They're a huge pain, and they're have their own security vulnerabilities which you just touched on. We are really in the beginning of using multi-factor authentication across platforms, and that will get much more sophisticated, over the next few years. I think, as we use the technologies consumers have in hand to validate them by various biometrics and across voice, iris scans, etc., fingerprints, and use these in combination and that will hopefully address much of the issues associated with that one security vulnerability of passwords. But I think the point here is that technologies will, in many cases, eliminate that trade-off or significantly reduce it between customer experience and security, and that's good for everyone.
Agreed. I'm going to change gears a little bit and stop with the slideware here. And the larger theme of this overall series that we're doing with Bright Talk is around digital transformation. So we've talked about a number of macro trends that I've observed, but I'm curious, what are some of the other trends that you're seeing around digital transformation? And maybe this time, Neil, I'll start with you.
Yeah, okay. I think there's this whole area of digital transformation is evolving. About almost exactly, actually 5 years ago, I wrote an article about the future of banking, and at that time, banking was under siege from a lot of new fintechs that had come into being and were essentially saying, we're going to make you banks your dinosaurs. We're going to make you obsolete, and we're going to take your market. And there was actually a lot of fear in banks at that time. And the kind of positioning of banks against fintechs was a kind of adversarial one. And I kind of took the position that, the future is going to be banks that work well with fintechs, because banks have the customers and they have the trust of their customers. Fintechs less so, but fintechs have lots of new and interesting technology. And so they really need to work together. And the winners are going to be the ones that the banks that work with fintechs and the fintechs that work very well with banks. Now, 5 years later, that would not be a very controversial view. And I think that's a good thing. We're seeing a lot more cooperation between banks and fintechs. Banks are doing a lot of things like having incubators, special funds, almost venture capital funds even, to engage with technology companies, because they know the future is all about technology. So I think we're going to see a lot more of that, of banks depending on new fintechs with new ideas, new technologies. They realize now the competitive advantage that can be had with the right level of engagement with technology companies. And we're seeing that playing out in a world of open banking, where technologies have, there's a lot more use of APIs to link to different technologies together, and use of cloud infrastructure to drive costs down. And so I very much expect that trend to continue, with banks being at the center of ecosystems of software companies to develop new banking technologies. I think the decline of the in-branch experience, which we've touched on earlier, is going to continue, and perhaps not get to the point where there are no physical assets of banks, but I think we're going to see online banks, purely online banks, have a level of success that would be very difficult for any banks that are bound by physical assets to compete with. And that's not just going in the area of the customer experience, but the rates that customers can get on deposits and the rates that they can get on loans. There's a huge cost advantage to being purely digital. And I think we're going to see more of that on a bigger scale. I think the last thing I would kind of touch on is related to COVID-19. This is a phenomenon that's happened over the last 6 months, but I think it's going to have some very big lasting effects and has, already accelerated, and we've touched on this a little bit, accelerated the use of digital and, reduced the dependence on bank branches. And that's, we're still 6 months into this and it hasn't gone away yet. So it looks like this could be an area where banks have to keep innovating to, change their business models in a world where it is, just not feasible to have that kind of physical interaction with customers.
Right. And I couldn't agree more with Rochelle, all of those observations. Rob, what about you? What kind of trends are you seeing as relates to digital transformation?
I think one of the, certainly, I'd maybe say over the last 18 months, but has definitely been accelerated this year, is there's been a very heavy focus on the digital onboarding experience. And I think what people and institutions that have worked hard on that are starting to realize is that isn't the end of the story. To deliver a meaningful product that has very low cost, customer economics involved in it, you need to find ways to make the whole thing, the whole customer experience, from onboarding to the point where they maybe in 20 years no longer use your product, weed out the cost within that, and as best as possible digitize. And there are very few institutions, both FinTech and banks around the world, who have got that right yet. And I think that's where there's going to be a lot of work going into that over the next few years. How do we, yes, take the lessons of getting the onboarding journey right, and we see it from a fin crime perspective, that it's not very easy, but it is possible to streamline the onboarding processes and still manage your financial crime risks. But then you still see quite a heavy manual operational process in the background involved with managing that customer base going forward. Yes, transaction monitoring will do some of it. Yeah, of course, but it's about gluing it together and making sure the overall operation works efficiently so that as you're scaling, your economics make sense. And, there's a lot of institutions that we've been working with who are still going through that journey despite being fully digital. So I think there's some exciting stuff to be done on that, which is bringing together the component parts, making sure the technology stack is applicable, obviously, but then how do we make all of that work so that the economics and the business models that the fintechs are driving, and therefore, some of the larger institutions, legacy institutions, are trying to develop or compete against or partner on, that they actually work and they make money and are sustainable into the future. And I think that's the next step.
Excellent. Do you think, I guess I'll go back to you, Robert, how do you think banks and FIs, financial institutions, are adapting kind of to this new reality and to all of these trends? Yeah,
I think, again, the reality of where we are in 2020, I think, has probably accelerated the conversation by 2 to 5 years, because I think a lot of institutions have been forced by the circumstances that we faced to look at this very, very seriously. Like the industry, so the large banks have definitely started to, Neil alluded to it, have definitely started to respond to this and started to build products to either partner with or to compete with fintech.
Neil, what are some of the what is your perception on how banks and FIs are adapting to this new reality?
Well, it's interesting in the COVID period we're in. I think banks have got a reality check, certainly in the United States and maybe in some other countries, on their ability to develop and deploy technologies quickly. Um, Back in April, the government of the United States implemented what was called the PPP program, which is a Paycheck Protection Program, which essentially involves distributing hundreds of billions of dollars to businesses. And this was an emergency program, and the government relied on the banks to distribute that money as loans which would then be forgiven. And you'd think that, well, that's got to be pretty easy to do, distribute some money as kind of guaranteed loans and then operate the forgiveness process. But what turned out was very interesting, because the large banks were hugely unprepared for this, and were in many cases not even able to serve or even respond to their existing customer base. And so lots of banks went off and tried to develop new technologies very quickly in a matter of weeks. Some did a better job than others, but it was interesting that many of the smaller banks were actually distributed volumes of loans that were in some cases bigger than the top 10 banks in the country. And so they did this by, they were quick and nimble. They used technologies and their people in a very well orchestrated way. And so, there was a reality check there for the large banks. They discovered that while their, technology was, in many cases leading edge, their operational model didn't support new uses of that, and the ability to pivot quickly and scale quickly, and so it's I think that's kind of symptomatic of the issues in digital. You've got to be able to put new capabilities together quickly. You've got to be able to scale them quickly, and so far the large banks have showed that they're not terribly good at that yet. So it'll be interesting to see how these lessons are translated into new capabilities over the next couple of years.
Yeah, agreed. I'm going to go from macro to more micro. Based on the need for digital onboarding and the need to make that a more seamless process, and obviously that part of that involves KYC and AML checks. Maybe going back to you, Rob, what are some of the practical tips that you can maybe offer banks for streamlining the onboarding process for remote users?
So I think there's a couple of areas that I would always encourage people to think quite carefully about. First is understanding what you're trying to achieve. And what I mean by that is understanding between all of the stakeholders involved in the process of onboarding a new customer, what is the output that they require to meet their needs. So if you're doing a singular product, so let's say it's a very retail focused, let's say a bank account equivalent, the requirements are probably relatively simplistic. But if you are onboarding customers who may ultimately use multiple products with multiple different either data or regulatory requirements, understanding those and mapping those out is really important, because what you want to make sure is that as part of the onboarding journey, not only that you are collecting the right information from the customer, and that's an important differentiation, is what are you asking the customer to provide or validate, or what is it that you may know already about the customer? And we would differentiate between the two in the fact that I might need to give you a picture of myself as part of the onboarding process, but by giving you my postcode, you are able to go and look up my address and any other details.
Neil, what about you? What are some tips that you think you can offer banks for streamlining the onboarding process?
Well, back in July, which is not that long ago, I actually opened a new a business banking account with one of the largest banks in the US, and went online and tried to open the account and couldn't. And basically it seemed like the gauntlet of checks was just a bit too tight for me to get through and provide the necessary documentation. So I was told I needed to go to a branch, and the branch in this case was about 8 miles away. So I did. I went to the branch and told them that I tried to open it online, and the response was, well, the online is new. So open business banking account in one of the largest banks in the US is new in July of 2020. Okay, so then I had to sit down for over an hour to open the account in presence, having made an appointment with a business banker. So a little bit more, perhaps more involved than opening a consumer account, but yeah, I was kind of astonished in many ways at how it played out, because one of the things had to do with provide the NICS code, that's the North American Industrial Classification Code, to that says what kind of a business it is. And obviously that's very important for anti-money laundering. You know, I'm not a gambling business, I'm not whatever. And so I was told that, well, it takes about half an hour to pick the NICS code. Like, what? We're going to pick a code, a 6-digit code, to say what kind of business this is going to take half an hour. Well, it didn't take quite half an hour, but you know, this is the kind of thing that should be almost completely automatic. And you know, we're in a world where the expectation is to do this very quickly, and you know, not take up somebody's time in a branch. So you know, if I was to give some kind of tips based on all of that, it would, you know, be, I think, quite in line with what Robert was saying. For online, you've got to figure out what you really need, and it's different to a branch. Remember, in a branch, you had the customer captive. You could get them to fill in a pile of forms and take half an hour to do it, and you had them captive. Online, you can't do that. If you ask for too much information or difficult to find information, your abandonment rate is going to go way up. So you need some capability to do kind of A/B testing and figure out, okay, if I ask for a piece of information like the TIN of your business, is it going to be easy for you to find that off the get-go or not? Should I be asking this early in the process or late in the process? So you got to also leverage what you know much better. It can't be like you're a completely new customer every time you open some kind of account. You're not. The bank already knows a lot about you and has knowledge sources that should be leveraged much better. I think it's important to get through the onboarding process in one session. Don't give the customer homework. And there's lots of ways in which banks give customers homework, including things like checking micro deposits, which again drive up abandonment rate. You don't want that. Get it all done in one session, and not a very long session. Again, touching on what Robert said, you know, you can't have handoffs to kind of people that have to check things. The checking has got to be really highly automated, and you got to know how long it's going to take to check things. So you can't have a kind of man-in-the-middle approach. And lots of banks make the mistake of doing this because they build their digital based off a process map of their existing process, which is not quite digital. So those kind of man-in-the-middle type of checks, you have to find a new way of doing that. I think it's important also, if the process is not going to come to a successful conclusion and a happy ending, that you kind of exit out of it quickly and tell the customer, well, you don't have what you need, or we're not going to give you an account because we don't like your kind of business, whatever it is. But don't keep stringing the customer along for an hour and then tell them we can't do it.
Right.
So, you know, all of those are kind of, you know, good experience and, you know, specific issues to address. I think the big thing for banks to think about with digital onboarding and at really the leadership level is to don't suffer from lack of ambition. your digital experience should be comparable to the best digital experiences in the world, not just in banking, but in anything, in retailing, in music. The Spotifys and the Amazons of the world are setting the standards. Too often banks decide, oh, our new onboarding process is, it takes 50% less time than our old onboarding process. Well, it took weeks in the first place, so being not quite as bad as you were is not a good measure of success. So I think it's important for the leadership in financial institutions to set the standard of how good a customer experience and how quick digital onboarding is going to happen, and then to build out to that objective.
I agree. And one of the things we've seen, there's stats out there that say 40 to 50% of new account openings are abandoned online. 40 to 50%, because the process just simply takes too long, it's too clunky, it's too onerous. I think it's also a big reason why some of these digital banks, especially in the UK, have become so successful. One of our customers is Monzo, and they had a goal of, we want every customer to be able to open an account from the time if they enter a coffee queue to get coffee. By the time they get to the front of the queue and they pay, they were able to offer, to have the account open, so within minutes. And that was always their goal, is streamline it, make it simple. I think that's a big part of their success. And I think a lot of the challenger banks, specifically in the UK, are setting a fairly high bar when it comes to the user experience. And Robert, I think obviously you're in the UK, and I think you've seen some of the success of some of these challenger or neobanks. Do you have any kind of other perspective on like that from an onboarding perspective?
Yeah, I think the only thing I would add to all of those points is don't forget the journey of those people that fall out of the fully automated workflow. The fully automated workflows will only account for, let's say, in a really good place, 80 to 90% of those people that are signing up for your product. And believe it or not, that 10% that then falls out of that can be the ones that really causes some challenge for the institutions to think about. So like I said at the beginning, or one of the earlier sections, thinking about the complete funnel of how you are acquiring your customers, dealing with the regulatory requirements, and then managing them going forward, especially from a fin crime perspective, is super important when developing those strategies.
Agreed. I'm going to finish off with one last question, and that is, what are some of the biggest online threats you think facing banks today? And maybe I'll start, Robert, with you. This is your bailiwick. This is where you guys focus on, is fin crime. So I'm curious what you think some of the biggest threats are today, kind of in the COVID era.
Scale. Scale is probably the biggest challenge. I think for all of the reasons that we talked about at the beginning of the session, the scale can swamp an institution if it's not managed carefully. So what I mean by scale is the volume of potential either fraudulent attacks against your product, so looking to defraud you of money by signing up with fake details, whatever it might be, all the way through to low-level money laundering via money mules, etc. It can very quickly swamp institutions. So thinking about what the risks are and how you mitigate them in your early controls, what we would call your gatekeeper controls. How do you stop that criminality creeping into your business in the first place is super important. And tuning the controls, so using products like yourself at Jumio, using them properly, using them in a very well considered way as to how you deploy the technology, making sure it's focused on the right areas of risks that you need to address, is the most effective way of addressing those challenges.
Anil, as far as what are you seeing as some of the bigger threats facing banks today?
Well, I think when you talk about threats, you can make a very long list. Card fraud, account takeovers, phishing, identity fraud, even attacks by state actors, and these are changing all the time. There's more and more of them. So you can deploy countermeasures to deal with each one of those kind of types of fraud, and banks are all doing that. But I think the biggest threat is interestingly, I think is old think. It's a lack of the appropriate perspective and understanding of digital. The leaderships in banks have got to be at a point where they have a really visceral understanding of, as Robert pointed out, what it means to scale digital and how you deal with the potential fraud vectors that occur in massive online banking.
Yeah, and I think one of the things you and I have had a conversation about this in the past, and you said in some of the banks' haste to go digital, right? They've left themselves open, right? They've exposed themselves to fraud and other threat vectors, right? And maybe you could speak to that a little bit, because I thought that was super interesting, that by moving as quickly as they are on digital transformation, they're leaving themselves open.
Yeah, I think historically the positioning of fraud and indeed anti-money laundering functions within a bank has kind of been in the back office, and that really needs to change going forward. The fraud and anti-fraud and anti-money laundering capabilities really need to be deployed much more upfront into the digital experience, and that's a kind of a cultural and organizational change for banks.
Agreed. And maybe, Robert, I'm going to leave you with the parting thoughts. When you think about any final recommendations you'd give to banks and financial institutions around digital transformation, what are some of those recommendations that you'd give them?
Think of it as a whole. Don't just think about the onboarding journey, although that is very important. Look at the whole experience for the customer and how you're going to operationalize that. So from a financial crime perspective, how you can manage that through the complete life cycle. And if you get that planned out and thought through well, then the overall product fit and how you manage the risks will take care of themselves.
Excellent. Hey, well, I think we've come up against our time, but hey, Neil and Rob, thank you so much for your time. I know we had a few little technical difficulties, but it wouldn't be a webcast in 2020 in Zoom without a few technical difficulties. So thank you guys so much for your time. Really appreciate it and appreciate the insights. Have a great day. Thanks.
Thank you.